Hello, hello. Today is October 13th, 2020, and that means it's time for Norm Winsky. It's all yours, Norm.
Thank you very much, Jeff. Thanks for having me on your show. I thought I'd just start off by sharing some wisdom I picked up and knowledge I picked up over my 50 years of studying the markets. And by the way, speaking of longevity, this month, at the end of the month, will be my 42nd anniversary of doing my monthly letter. And never missed a deadline, by the way. And so now I'm going to share it with you. I know a lot of you like to trade stocks and are picking stocks. And here's some knowledge I picked up back in the 80s, and you can go Google it. And the fact is, this is not my opinion, this is statistical research, that picking stocks is a losing game. The odds are stacked against you. You do much better just trading an index. The 50% of all individual stock price behavior is attributable to the general market trend, and 30% is the industrial sector that stock is in. So that for all your hard work, it's only 20% that you're benefiting from picking that stock. And then you got the risk of picking an individual security, and they may lie to you about their earnings or new company news, and then have a big shock, and then you get a big shock on your account. So there you go. So that's number one. Number two, there's a myth that commodities are risky, dangerous. Well, if you go look at the leading stocks of the day today, Amazon, your Apples and all that, they tend to be much more volatile than most of your commodities. How often have you seen Apple in the last few weeks move 8 to 10%? How often have you seen corn move 8 to 10%? Corn hardly ever moves. I'm not saying never, but it's very rare for corn to move 10% in a day. But Apple does that. Amazon does that. These stocks are more volatile than commodities are. You have to be able to be a good money manager, though, because in futures they treat you like an adult, and they will allow you to leverage much more than they do in stocks, where they don't trust you and they treat you like a child. Okay, so the trading futures is good. Oh, and there's one more thing. If you're an American citizen and you pay American taxes to the IRS, you get a better tax treatment trading futures. You get 60-40. If you make a profit, you get instant long-term capital gains of 60% of your profit. You get in and get out in 1 second, and you'll have long-term capital gains, whereas you're doing stocks, and the other 40% of short-term capital gains. If you trade stocks, all of that goes to your short-term gains schedule, which is probably equivalent to about your income bracket, which, if you're lucky, might be a lot higher. So you get a lower blended rate trading futures, and I'll be happy to help you with that. Now we're going to review what I said back on the 24th when I was on Jeff's show last. So I'm going to give you 3 windows that we had back there, and we'll show you how, the different markets that go with those planetary events and what happened. By the way, this is some of the same stuff that Mr. W.D. Gann did. He's considered by the Market Technicians Association, that's the big professional technicians headquartered in New York there, and they got Mr. Gann as one of probably the top technical analysts of the 20th century. You go for their advanced test, they test you on Gann. So if you want to learn advanced technical analysis, I'm your guy. So here we go. We had Neptune in Pisces line up with Pluto in Capricorn, and that was for cocoa, coffee, hogs, oil, stocks, and T-bonds. Stocks respond to everything, but the other markets and commodities only respond to certain things. Venus is at 0 latitude. That's a big deal for your Venus markets: cattle, cotton, copper, stock, sugar, and wheat. And then here's a Gann point. You get to learn a bit of a little Gann math. Now, Gann loved the square numbers, and he liked time. He said time was more important than price. He was big on time cycles, thought that if you had the right time, you would get the right price. So here we go. We got 17,424 days. That's 132 squared. Go back and look, you'll see that was a major top there on the 11th of January, 1973. We went into the biggest bear market after that since the 30s. The Dow lost a half of its value in 23 months. So that was a big day there in Dow Jones history. And so extrapolate that out, and we came out to the 25th of December. And then we had the weekend of AC is after the close, so that's overnight. The weekend, that wasn't a weekend. No, that wasn't a weekend. Sorry about that. After the close, we had Saturn in Capricorn turning direct, we have what's called retrograde and direct. From the point of view of the Earth, that's all relative motion. It looks like the planets stop their motion from the point of view of the Earth, and then they reverse the direction. And so Saturn was doing that the night of the 28th, and we'll be looking at coffee and stocks. So here's our first chart here. There's cattle. We go in alphabetical order to keep it simple. There's our first window cattle. Nice low there in the cattle market. There's a nice top there, and your cocoa green is good. You see a red one, that's a miss. There's a red one. See, I actually have a miss there. Coffee, you would have probably sold there, and then we would have been, anyway, that doesn't match my parameters. I counted that as a miss. Down here a couple days later, though, we had a better deal buying near that on that low there, and you got a 2-day pop up, and oh, good, my computer went to sleep for 5 seconds. All right, then copper. Here's a classic miss. It just keeps going. If you're going up, we want to sell, and it kept going higher, so that's an obvious miss. You would have lost money on that one. Cotton popped up into our window, so that's it. We're looking for the sell there. And then you had a nice 2-day pullback there. You could have made some money. Here's your hogs, had a pullback right into our window for hogs, and it popped up, and you could have made some money. Crude oil was going pretty much absolutely sideways, so I put a yellow bar there to say we're not doing anything there. We don't do sideways. It's Newton's law. For every action, there's an opposite. We'll be looking for opposite equal reaction. There's the S&P going down, down, down into our after the 25th opening window. And that was a beautiful bottom there, and you were just a little bit off of the bottom the previous day, and you had a nice opportunity there to go along on the opening. Then you popped up and you made a topping formation there over the 29th, and then you pulled back into the 29th, 30th, and so you had a chance to make a little bit of money there. Sugar is a beautiful thing. Look at that. That was going up, up, up. You sold the opening there in sugar, and it got whacked for about a day or two. Nice big move there in sugar. T-bonds were going up, up, up. You sold there, and you were about a day off of that high there. You had a little pullback there the next day. Could have made some small money. And this might be one of the better ones. Wheat going down, down, down into our window for a low for wheat. And then it reversed, and then you had a big rally. So that's about as good as it gets. Here's the score. I had 13 arrows there, 13 potential signals. We had 11 green ones, 2 misses, and that's 84.62%. So here's a little educational thing now. I did not forecast this when I was last on the show, but this just happened over the last few days, over the past weekend. We had Jupiter in Capricorn with 60 degrees in Neptune and Pisces. Neptune, I think I might have mentioned in other shows or before, Neptune has to do with oil, and there you go, and in Capricorn, we already did that. And then also, the stocks respond to all this stuff. And heliocentric, that's from the point of view of the sun. Jupiter changed signs, so we had a kind of a cluster over the weekend. So and that would be Aquarius is copper. So let's go look at oil and copper, and of course the stock market. We now know on Monday made a pretty good top there, and we'll be talking about that in a minute. How the stock market went down today and what that means. So there you go. There's crude oil made a low on Monday morning. And that's we allow these windows to go into the early part of the next day, and you made it a little there, and you got a bit of a bounce on the oil. Look at this beautiful top on the copper, chop, chop, chop in a trading range, and it made its final top right there early in the early hours on Monday morning, and then it dropped 5 cents. Every penny in copper is worth $250. That's $1,250. I think the bounce here on the crude oil was about $1.50. That's about $1,500. So now we're going to look ahead into the future. Now tonight, Thursday, the 13th, by the way, all my charts were done the previous night. You will have to go update all these windows here, these markets, and see what's happening. We're looking for a market to get to some extreme. Not all of them will cooperate. The ones that get the biggest extreme are the ones that candidates for the biggest reversals. So Mercury is turning retrograde tonight, and don't sign any contracts on a Mercury retrograde, by the way. And we got, is in Scorpio, well, Mercury is grains, and then in Scorpio, we're looking at cocoa, hogs, and T-bonds. And there you go. So you got cocoa, hogs, stocks, T-bonds, and wheat. And then later in the week, by the way, I'm going to interpret that for you now. The stocks went down today, closed near the lows, not all the lows, but closer to the low, way closer to the lows than where they were a day ago. And so, ideally, we'd like to see this stock market open lower. The gap down would be great. The closer to today's lows or farther beyond that would be even better. We want to see a little panic tomorrow morning after Mercury turns retrograde, get a bit of a reaction, get to an extreme, and then you might be set up for at least a short-term low. Then we'd be looking for a rally into, if that happens, we'd be looking to a rally into the end of the week when we have a new moon at perigee. That only happens, the new moon perigee is when the moon is at its closest. Those two cycles, that's called a syzygy, when two cycles coincide, only occur every 14 months. I think average 423 days. And that often brings an important change in trend. And the moon is often financials, grains, precious metals. And in Libra, that's where we're going to be doing that this time. We're featuring sugar and wheat. So there we go. So you can look it up on Wikipedia. It's called a supermoon. And then we have also over the weekend at Neptune. We had that earlier back in September. Neptune lining up with Pluto again. And that's your cocoa, coffee, hogs, oil, stocks, and T-bonds. So if you'd like to learn more about this, maybe you're doing better than my 84%. I'd love to hear about it. If you're not, you might want to see how I might be able to help you improve your batting average. And I got free classes here, and you can contact me. And there's my phone here in beautiful sunny Naples, Florida. And there's my Skype. You can email me. Looking forward to helping some of your folks, Jeff.
Well, you can't beat the price. A free class is a free class. And it's nice to know what your indicators are calling for the market this week. I haven't had my analysis yet, but maybe I'll cheat a bit now that I know what you think's coming. Norm, that's terrific as always. Your batting average is terrific as always. And we're going to see you back in a few weeks, and we'll see how these calls work. Okay?
You bet. Thanks a lot, Jeff.
Okay. Bye-bye.
Bye.